Hey everybody, hope everyone's doing well and had a good day. This is going to be a brief recap of the Emini 5-minute chart for Tuesday, February 4th, 2025. So as we went into the day, we had a small gap down, and you can assume there's a trading range in the Globex session whenever there's a small gap, and that goes right along with the context to the left. Big up, big down, big confusion. It's a trading range. Now it might be slightly more bullish because you can argue we had this big bull breakout, double bottom pullback, second leg up. Now we're creating a higher low on today's open. So the bulls can argue this is a bull channel. And you can see higher highs and higher lows. And we rallied to the channel line this morning. And you can see there's some hesitation up here near the channel line. We tried to break out, we failed, pulling back, but this looks like a minor reversal. So the best the bears can hope for here is probably a trading range. But it's not great for the bulls either, because even though this rally has a lot of bull bars and open gaps, how much is actually breaking out to the bars? How much is breaking out of the bars to the left? You have a bull breakout here, weak follow through, another bull breakout, no follow through. Starting to go sideways here, so we're losing momentum to the upside, and we may have to pull back further to find traders willing to buy. But we have trapped traders below, so probably buyers below, and second leg up likely. The bulls get their bare minimum, second leg after a pullback, sellers at the new high, but still not a great reversal setup. Might have to go higher to find sellers, but also might have to go lower before the buyers come back in. So tight trading range here. 18 breakout attempt, but double bottom, so it's leg 2, and in here it's 3 attempts down. 1, 2, 3. So this is a late leg. Bulls will buy, looking for at least a scalp to a new high. The bears might sell, but it's a 4-bar micro channel that's weak. There's probably sellers above bar 18. Get a buy vacuum 19, but getting to the top of the range again. And now it's a nested wedge. 3 legs up here. 1, 2, 3. And through here. 1, 2, 3. So probably sellers. Limited upside here. Bulls trying to get the breakout. 19, good bar, but bad follow through. 20, much smaller bar. And then another small bar, 21. So not ideal for the bulls. So again, we may have to pull back further, maybe lower, before the buyers come back in, because the bulls are taking profits at new highs. They're not buying new highs. This is a small spike in channel. At a minimum, we'll probably test the 20 low, but this entire trading range might get retested. The lows might get retested, 13 or 18, because the momentum here is really not great. So what are the odds we get a measured move up of the trading range before we test the bottom of the range? 24, breakout attempt, and then bad follow through, 25. High 1, 26. Good for the bulls, but they really need follow through here, and then 27 outside down. And the more this looks like it's trading, the more this looks like it's failing for the bulls, the more traders will look to buy a pullback, and bears might also look to sell. Again, betting that we're in this trading range and the lows might have to be retested. Breakout follow through 28, probably going at least a little bit lower. Second leg down likely, trapped traders above. 29, the bulls see a pullback and a bar to buy above, but not ideal after bear breakout and follow through, and a late leg, 3 legs up. The bears see a breakout pullback, breakout, pullback, probably sellers above. Bears get a minimum second leg, 1, pullback, 2, the tail of 30. Now a micro double bottom for the bulls to buy, but a couple of small bars, lots of overlap, Second leg down, still likely. Probably sellers at the 26 low. You have traders who bought below 26, trapped on 27 and 28, and that, what traders were hoping would be support, became resistance. So probably sellers here. You can see the market attempted to test that price, sold off, trying again. Now we have a low too short, 34 or 33. And as far as the bull argument, still might be a bull channel, higher highs and higher lows, but channels evolve into trading ranges, so we may have to test, like I said, the bottom of the trading range, the start of the bull channel. So 34, big sell off, but now a late leg, might be a second leg trap in a trading range. 1, pullback, 2. Because these lows are the target, it seems like we're going at least a little bit lower, and we have an open gap here, so probably sellers at the 29 low. You can see we paused, tested that price, sold off a bit further, but now at this point, might be 2 or 3 legs down. 1, 2, pause, 3, trying to break out below the trading range, but the rally still looks bigger and stronger than the sell-off. So here, the bears need one more bar. Whenever that's the case, they usually don't get it. And they had a disappointing follow-through bar. So bulls, if they're out for any reason, I think it's still probably always in long, and you can buy above a bar closing near its high, buy above a bull bar closing near its high. This is also a 50% pullback, so the bears really need to break out here. And then 40 beginning to reverse up. So the risk for the bears is we found the bottom of the range, and the stop might be here. And if you're selling, maybe a target down here. The risk is that we test all the way back up here before going down here. So big risk and probability not much greater than 50-50, if it is greater at all, because we're in a trading range and it looks more bullish. So like I said, might be always in long. Breakout follow through for the bulls, 39, probably going to get a second leg up, but the bears might need a second leg down first. I have to speed it up here. I have less time than I thought today, but we can see for the bears becoming an endless pullback, this rally is disappointing. It trapped traders below, and you can see a 50% pullback of this rally here, bouncing at 45. So what happened? Let's say traders sold below 36, got trapped on 37, and the rally, and they sold more below 43. You can see how close the market came to that break-even price, and during 44, traders took it. Those who sold down here scaled in higher, and this is just a stop order example, selling with a stop below 36 and below 43. But if you also scale in with limit orders, let's say you take this sell 36 and you sell more above the high of 36, then your average price would have been met during 44. So you had to be quick and clever, but you could have avoided a loss if you did sell down here and scaled in higher. But that buying is what leads to a second leg up. So endless pullback of the pullback, and then second leg. And then traders are wondering, is this the range of the trading range, and do we have to test the highs before we get back down to the lows? Right now through here, nothing to sell for the bears. 50, good bar, but tight bull channel, probably a minor reversal. And then the bears trying again, 54. They really need one more bar, and they don't get it, 55. And another buy vacuum, probably going to get a second leg, but the risk is that this is a late leg and high in a trading range. But there are trapped traders here, open gaps, so at least a small second leg likely. But then we test the highs, and now we're in the sell zone of the trading range. So the rally looks decent, but again, it might be leg 3 at the top of a trading range, so really not ideal to buy up here. Buying a deep pullback would be okay, and fading it might be okay, but as far as buying here, really not ideal. But the bulls still got a pullback and a second leg. At this point, a second reversal. 61, top of a trading range, late leg. 62 might be a bar you respect if you're long and just get out below it. Look to buy again lower. And then endless pullback. 66, a big breakout bar, probably going at least a little bit lower. This bar trapped traders, even though it closed weak. If you bought below 66, you're trapped into a losing position, and you're probably just trying to get out of that trade without a loss at this point. So 66 might pull back, but it also might be a sell to close bar. Like I said, second leg down likely. Pulling back, testing the 65 low and higher, but still probably sellers above 66. We're still within the range of 66. 66 is a big bar, so big risk. The signal bar is weak if you're buying above it, so probably sellers above, stop up here, maybe a target down here. And then bears defend their stops above 66. We start to get that second leg. Getting near the lows, but then we get 73. Now we have a double bottom, a decent bull bar, but after 3 bear bars, probably sellers above and second leg down likely, so the bulls might need a second reversal here. In this case, we got a surprise, 74, breakout, crossing the moving average, breakout and follow through, second leg up, likely we just had a couple of legs down, testing support. So 75, probably a minor reversal, second leg up likely. And now at this point, it's a tight trading range. Traders are selling high and buying low. And that's about it for today. Again, I apologize for how brief this video was. I just wanted to do something. Thought it was better than nothing. So thanks everybody for watching, and I hope everyone has a good night.